Welcome back to Explain the Charts. Today we're examining the S&P 500, specifically the SPY ETF, to see what the news and the charts are telling us about this major index. Let's start with the news and current events surrounding the S&P 500. Recent headlines point to concerns about the Federal Reserve's potential rate cuts, as well as a general sentiment of uncertainty in the market. With a close eye on the third-quarter earnings preview, investors are cautiously evaluating the economic landscape and the likelihood of a soft landing. Rising bond yields have also contributed to market volatility, creating an environment where traders are seeking clarity and guidance. While the Nasdaq Composite experienced gains on Monday due to a surge in Nvidia's stock price, the Dow and S&P 500 both fell from record highs, demonstrating the broader market's hesitancy. Now, let's dive into the SPY chart data and see what insights we can gather. Firstly, let's look at the daily chart. The SPY chart is currently displaying a slightly bearish trend, with the recent price action suggesting a potential downward correction. Over the past few weeks, the index has been consolidating around a key resistance level, which suggests a period of uncertainty and potential for a breakout or breakdown. The recent decline from the all-time high indicates a potential shift in sentiment, with investors becoming more cautious. The daily chart is showing some signs of weakness, with bearish engulfing candles and a potential bearish crossover in the moving averages. It's important to analyze the 1-hour chart to get a better understanding of the short-term trends. Zooming into the 1-hour timeframe allows us to see the more immediate price fluctuations and potential for reversals. On the 1-hour chart, we see that SPY is currently trading in a tight range, suggesting a period of indecision in the market. The price action is characterized by smaller candles with lower volume, indicating a lack of strong buying or selling pressure. There are signs of potential support levels at the lower end of the range, but the resistance level has held strong, preventing any significant upside breakout. Looking at the 15-minute chart gives us the most granular perspective on SPY's price movement. The short-term timeframe allows us to identify potential buy or sell signals and quickly respond to any sudden shifts in the market. On the 15-minute chart, we see a more volatile price action, with smaller candles fluctuating more rapidly. This volatility makes it challenging to predict the immediate direction of SPY, but it also presents potential trading opportunities for scalpers and day traders. While there are signs of potential support and resistance levels in this time frame, it's important to use additional technical indicators and strategies to confirm your trading decisions. Based on the current news and chart data, we can make some unbiased predictions about SPY's future direction. In the short term, SPY seems poised for a potential downward correction, but the tight range in the 1-hour chart suggests that a breakout or breakdown could occur quickly. The daily chart's bearish engulfing candles and potential bearish crossover in moving averages reinforce this short-term bearish outlook. However, the 15-minute chart's volatility and the potential for a rapid reversal create opportunities for traders to capitalize on short-term price swings. Long-term predictions are more difficult to make, as the market can be influenced by numerous factors, including economic data, geopolitical events, and investor sentiment. The recent consolidation around the resistance level indicates a period of uncertainty and potential for a long-term breakout or breakdown. However, the current bearish trend and the lack of strong buying pressure suggests that the downside potential may be greater than the upside potential in the long term. To recap, here are the key price levels to watch for SPY. The recent resistance level is currently acting as a potential barrier to further upside movement. If SPY breaks above this resistance level, it could signal a bullish trend and a continuation of the upward movement. However, if SPY breaks below the support level, it could signal a bearish trend and a continuation of the downward movement. In the short term, SPY seems poised for a potential downward correction, but the tight range in the 1-hour chart suggests that a breakout or breakdown could occur quickly. The daily chart's bearish engulfing candles and potential bearish crossover in moving averages reinforce this short-term bearish outlook. However, the 15-minute chart's volatility and the potential for a rapid reversal create opportunities for traders to capitalize on short-term price swings. In addition to watching the price action and key levels, traders should also keep an eye on the upcoming economic data releases and earnings reports, as these events could significantly impact SPY's direction. The third quarter earnings preview will play a crucial role in shaping investor sentiment and influencing the market's trajectory. Traders should also pay close attention to the Fed's interest rate decisions and any changes in monetary policy, as these factors can have a profound impact on the broader market. By carefully analyzing the news, charts, and key indicators, traders can increase their chances of making informed trading decisions and potentially capitalize on the opportunities presented by the S&P 500.